Hi, I'm David Hsiao. I founded Block Journal, a crypto Web3 news company, about 6, 7 years ago. Thank you everyone for NFT.NYC for having me here again. It's great to be back here in New York City. Today we'll be talking about investing in NFTs. We'll go through a quick summary of sort of the recent events, the last couple of years in NFTs, and then hopefully we'll do a quick look into what we can expect in the future of NFTs. I'll cover as much as I can in the 10 minutes. So when I spoke here last year, things were pretty different. Let me paint you a picture. It was June 2022. We were at NFT.NYC over in Times Square. Bored apes were about $300,000. Crypto had just started crashing. Russia hadn't started things with Ukraine yet. The world was adjusting to post-COVID life. Here are two slides I used last year in this same topic, actually. The first slide was NFTs at the time, and the second, prediction of the future of NFTs. In summary, I thought the NFT market was overheated at the time. There was too much quantity over quality. I thought that we were entering a bear market, but was still positive on the future. I thought that NFTs would have to transition to real world use to remain relevant. And lastly, I thought 2021 was very much like crypto in 2017, if you guys remember that time. It's just starting to catch the world's attention, not really sure where the technology was headed. And let's take a look at today's NFTs. Here are a few of the so-called blue chip NFTs. I had these slides made about 2 weeks ago, so some of the numbers may vary a little bit. The Ethereum price has changed quite a bit for the better. Bored Ape, 450K floor price at the time. Today, about 100K. Doodles, 60K at the time. Today, about 6K. Azuki, apologies, the slide has an error, but today it's actually around 90K. Back then it was 90K, now it's about 25K for one. And lastly, the big elephant in the room, OpenSea volume. Exactly a year ago, OpenSea volume was around 4.8 billion for the month. Last month, around 200 million. Of course, some new competitors and market conditions have had a big factor on that. And keep in mind, these are the best of the best leading the NFTs, the top 1%. My point, most of the recognized NFTs are down. If we look at NFTs not in the top 1%, they're probably down even more, probably over 90%. So what happened? How did trading volume get so high, and why is it that things look so different in just a year's time? The first big catalyst, I think we had a big COVID-driven pump. And what do I mean by this? The entire planet didn't really travel or go out for the year, at 1 or 2 years even. People didn't leave their homes, people didn't go to other countries, yet those years were bull markets for not only in crypto, but everything else. Bored Ape, NBA Top Shot, Pokemon cards, basketball cards, stock markets, all up. COVID also affected people from a behavioral standpoint, right? It changed our digital habits. We spent a lot more time online. We connected through work through Zoom. We caught up with friends through Discord. We let ourselves find new hobbies online, and I think that drove a lot of people to things like gaming, streaming, content creation, and of course, trading NFTs too. I mean, there just really wasn't that much to do at the time. People were bored online looking for things to buy, right? I also do think that there were way too many NFTs back in 2021, and how many of those are still active or alive today? I'd say less than 5% from just 1 or 2 years ago. NFTs also didn't really offer a connection to the real world. I said earlier that COVID, now I think COVID is for the most part over. Look at everyone here at the conference today. Seems things are pretty back to normal, right? Purely digital experiences may not be enough moving forward. I think people will need some benefits attached to their real physical lives again, because the metaverse may just not be enough. I actually don't think the hype around the metaverse is going to translate to reality as quickly as people think. Look at Disney, for example, one of the largest companies in the world. They started their metaverse division about a year ago, and they just shut down the division last month. Didn't even last a year. And sure, there are layoffs everywhere, but I don't think that's a very good signal for the metaverse for right now. With that said about the past, let's look at what's happened recently in NFTs today. OpenSea, one of the biggest names as we all know. I think it's always a good indicator to look at OpenSea data to sort of see where the market is today. In fact, they're definitely in this conference somewhere here today too. Trading volumes, unfortunately, down year on year, billions to millions, as we saw earlier. We recently saw the rise of competitors like Blur. If you haven't heard of Blur, what Blur basically did was they airdropped anyone who's ever traded NFTs ever they gave their Blur token to basically steal customers over to migrate, cannibalize their customers, migrate them over to OpenSea, which was a cool strategy, but it seems to have worked, right? This leads me to my next point: lack of innovation. Competitors like Blur, and I'm sure many more in the future, are trying these new creative strategies, keeping users engaged. While in my humble opinion, I think OpenSea has sort of been left playing catch-up with ineffective strategies like lowering trading fees to zero, which just isn't exciting or innovating anymore. So the question to me is, will OpenSea be the Facebook or MySpace of NFTs? I guess time will tell. Dynamic NFTs. So if these types of NFTs gain popularity recently, they're basically an NFT that will morph or change based on user behaviors or conditional behaviors. This one on the slide is called checks. You might have seen it around if you've been following. If you're not familiar, checks started off with about 16,000 of these checks on the left. So it'd be a full page of checks. And as people bought these, you could take these checks, take multiple checks, burn them, and they would get fewer and fewer until the final goal is to reach this final black check at the end. The creator of this, called his name is Visualize Value, meant for this to be a social experiment and a commentary on how society views online verification checks. And this little experiment alone has done about 140 million in trading volume alone. So I think what this shows is that people are very much still interested in NFTs, whether despite market conditions, if you can still give them something interesting to look at. I thought checks was a really refreshing way to use NFTs to engage with people, and I think we'll be seeing a lot more of variations of dynamic NFTs that sort of change with user behavior in the future. Another popular recent development was Yuga Labs' Dookie Dash. To me, this was the first successful, purely NFT-based game. If you haven't heard of Dookie Dash, and I'm not joking when I say this, you pay thousands of dollars to ride a monkey through a sewer collecting garbage. And I won't go through all these numbers, but it was an incredibly simple game, very addictive. Basically, a lot of players played. They spent a lot of money trying to get higher scores, and then they spent a lot of time playing too. Over 80 years was played in about 2 weeks' time, which is pretty incredible, and they did a good job. And the first place winner got a key which he sold for, I think, 1,000 ETH, which is around $2 million today. In the future, I think we'll also see a lot more play-to-earn games, whether it's from established brands like Yuga Labs or from new startups with even better or new ideas. AI art. I find AI art really fascinating. A robot is drawing anything you want in any style within seconds. What's not to like? Can we get a show of hands? Who here has tried generating art with AI? Oh, a lot of people. Cool. So thank you. So for those of you who didn't raise your hand, I recommend trying out Midjourney or DALL-E or any of the other AI systems. It's really cool. This is not sponsored. I think your mind will be blown. Really cool stuff. All the images in this PowerPoint were made with AI. Probably took me about 2 minutes. I just thought it'd be fun. Right now, artists are already using AI to sell as NFTs, and I think this AI is going to be integrated a lot in NFTs in the future. I find it pretty ironic too, considering AI is actually pulling data from all these artists, which are using AI to make art. Definitely a technology to keep an eye on. What's next? Gaming. So I said this in 2017 about crypto, and I think the same goes for NFTs. I think gaming is going to be a front seat driver or at least a passenger for NFTs going mainstream. NFTs are perfect master games. Trading in-game assets that are each unique, it really seems like a perfect marriage to me. I think within a few years, every in-game asset will be an NFT, whether it's a sword, potion, or Fortnite skin. They'll all be unique, immutable, and tradable. Okay, I'm just going to skip to the last slide. I think I don't have much time left. To conclude today's talk, what do we have to look forward to? We covered a little about what happened in NFTs this last year. If you've been listening, I think it's pretty obvious we're still very early in the business. I mean, the most successful NFT game to date was a monkey riding through a motorcycle through a sewer, right? We have the entire world of AI art at our fingertips, yet I think most people outside of this room probably have never touched it. I think your passports, hotel, airline points one day will all be NFTs. It's really not a matter of if, but when. However, I do think that when we reach the point where NFTs are mainstream, we will no longer call them NFTs. I think when a technology is working successfully, it's unnecessary for the user to sort of know how the background technology works. It's like how nobody understands how the internet works, but it just does, right? And I don't think NFTs are any different. That concludes my talk for today. Thank you all for your time and enjoy the rest of the conference.